here, and then rallies. It starts moving higher until we get up into that daily wick in this vicinity right here. That's this premium wick. So in this portion of price action, on this day, which is yesterday's trading, if we look at that like this, you want to your eye needs to be inside this little area right here. As soon as we enter that, you want to study how is price reacting when it gets to every quadrant and consequent encroachment level. Here's the tip, okay? If it can trade through the quadrant levels and it doesn't stop, like see how this right here went right to it and stopped and went lower? If you see that at anything like the consequent encroachment or the lower quadrant, and there's no bodies in the upper half or above the consequent encroachment level, then this is probably going to have a turtle soup scenario. In other words, it's going to come back down and maybe come back into this inefficiency. Okay. Now here's the $1,000,000 concept. Okay. This what I'm gonna show you and tell you about right now is how ICT literally knows how to hold on to these big runners. This is what I do all the time. How did he hold on to that 1,000-point slide? How did he hold on to that 2,500-point move here and there back in Forex days? How did I do all those things? This is it. You ready? You sitting down? Is your pen at the ready? Is your pencil sharpened? Get with it, ICT. Say it. Come on. The internet might turn off. Watch. The quadrant here, while we're bullish, the body was laid over top of it. And then we had this deep retracement. The only thing it went down to is this volume imbalance to that volume imbalance, which is what? I just taught it to you. Suspension block. It comes down to it here and then rallies up. The bodies stop below the upper quadrant, but reference that wick. It's above this candle's high and it pierced. It's colored above the upper quadrant. So anything like this is consolidation in here. For you retail ricks that like to trade bull flags and bear flags, this is when your bull flags will work because it's indicating the quadrants are being colored above. It's exploring above it. Discovery is permitted in price above the quadrants, and they're not stopping price. They're coloring above them and then coming back in. They're going above them and then coming back in. But if you look real close, the quadrants are supporting it as a discount. Below, look at the open on that candle there. They wick just a little bit above it here. All of this consolidation around it. Look at the bodies coalescing around that. Consequent encroachment. We stop it here, trade back down in, and then boom, they let the cork out of the bottle. Bang, it's gone. And if it's doing that in a market that's really bullish after creating something like this, where we have a big buy side imbalance, sell side efficiency that doesn't even trade to its upper quadrant, man, you have a javelin. Like this thing is leaving. It's got someplace to go, and it ain't going to wait around for you. And that's when you see it release here. And this is one of those instances where it leaves the um, the area of focus, which is this premium wick. But when it trades above it, this premium wick acts as what? Is now a discount array. So the bodies are laying right on top of the high of it, and then they just start just letting it go higher. In your charts that I shared this morning in Telegram, you see me do this. This is the ICT New York open kill zone, 7 o'clock to 10 o'clock in the morning for all markets. You can do all. You don't need to trade London. You don't need to trade equities opening. You don't need to trade a PM session. You don't need to trade Asia. You don't do any of that. You can make your entire career just with this. How can I do that, ICT? That's exactly what I want to do. Glad you asked. Swing low. Market drops down, clears the sell side, and then leaves. What's this up here? What's this high versus this one? High probability candidate for what? A run on liquidity. So if so, what highs am I? If we have relative equal highs like this, and watch the bodies. Did we really do the business of laying a body over top of that high? This was just a small little shallow run. That means anything that was up here or slightly above this wick is unfinished business. Unfinished business is a run on liquidity that was not completed. It's just a partial, just a tiny little drop down and then leave. No, 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 no. No. They want that money. They want those orders. They want that. So everyone that's short here that had a stop loss, and who would be wanting to short gold? Look at freaking social media. Look at them. They're all wanting to short gold. They want me to say, I hope gold goes down. Why? Why do you want that to happen? It's a beautiful market. It's telling you, hello, I'm bullish. Why would you want to talk against it? Like that's exactly what I was doing when I was 20. Like I wanted all the markets I was focusing on to be just, not when I first started, but when I first started shorting, because I wasn't a bear for a number of years. I didn't understand shorting. But when I first figured out how to short, I thought everything was going to drop. Every time I saw a bearish divergence, like, okay, now I understand how it works. So I wanted everything. And I hated when people talk good about something and I was looking to go short. And that's a sign of infancy. Like you're not equipped. You don't know what you're doing. If anything I say or anyone else says about a market that you hope goes one way or the other, and you lose your mind over that, just get off of social media because you're not properly equipped to be a trader, and you're not really in the right state of mind to be engaging and having any kind of discourse with other people. Because a real trader doesn't give two shits what the other person thinks about their market or their trade, or how much they make, how much they didn't make. We don't care. We don't care. Nobody cares what anybody else is doing when you're successful. Now, I like seeing other people successful, but that's a hindrance for someone that's developing. But if you have a buy side liquidity pool that's framed properly, as I give you, this is the right high needs to be lower than the high to the left of it. And when it's a buy side imbalance, sell side inefficiency, I'm sorry, buy side liquidity pool, see, that would have been an edit point right there. I would usually hit control and then M, and that would create a little marker for my timeline. And I'd go back and listen for that part and I'd clean it up. Well, I'm out here with a no safety net. So everything I mess up and say, it's there and I can't erase it, kind of like Twitter. But a low and a higher low to the right of it, that would be a candidate for what? It's a high probability candidate for sell side liquidity pool being purged. But if the market's bullish, you don't look at that like that. But if the market's bullish and it's left this, you want to see bodies plunge its way up into that. But look what it only did what? The wick. And then it drops down. And there's people out there, looking at ICU candlestick method. You try to trade this garbage, you're going to end up in an intensive care unit trying to trade with that trash. The, and you know what I'm talking about. The market did not leave a body out there. So it's dropping down. So they're going to see that as, oh, it's a short. And the only thing it's doing is dropping down into a discount array, order block, rallies up, clears it, and then leaves the body right there. That's officially running the liquidity here. But if we look at it on a 1 minute chart, which if I do that, then I have to toggle move on. Just look at this area right here. Look at your 5 minute chart at 8:15 a.m. Look at it on a 1 minute chart, and you'll see what that rectangle is there. But it rallies up, and that right there, this run from here to here, that's all your model needs to be, and you don't need a job. Let me say it again, slower. If you know how to frame this setup, which is something I taught in high probability short term trading and scalping, it's a couple videos. You don't even need to spend that much time doing anything with it. But then studying it, these setups appear every single day. Every single day. Every single trading day. This appears every day. And it occurs every single New York open kill zone. It may not be a long, it may be a short, but it's always there. You need to know where the draw on liquidity is. How can I do that? Give me a bias. Tell me how to do. You seem like you're very giving today. Well, if you're bullish because you have something like this, seeing a situation like this is a loaded deal, easy. Like it's a no-brainer. Or as Larry Williams would say in his 70s book, this is a lead pipe cinch trade. The first time I saw that in this book, I'm like, "What does that even mean? Like, what does that mean? What's a lead pipe?" It's so easy. It's like taking a lead pipe and smashing it in the head. Like, there's no defense against it. It's easy. It's like bringing a gun to a rubber band, matchup. Like, you're gonna fight somebody, but they're gonna sting you with a rubber band, and you got a Glock, fully loaded with hollow point. Who's gonna win that? It's obvious, right? It's so outmatched. Well, in my pursuit of finding the best of setups and framing it, that's why my stuff is so good because I've spent my entire life looking for that stuff. I filtered out all the BS. I filtered out everything that does not work. If it doesn't have a degree of precision element behind it, if there's any kind of ambiguity, it is not in my repertoire. It is not being taught by me. It is not being no emphasis is placed on that. And that is many times what makes me offensive to most people because they believe in their religion of what they think their indicators, their hero that they taught them, or maybe he's passed on and he's moved on in the afterlife. But they subscribe to these views when what I teach and I show and I can do and my students do, we rip this shit out of everything. There's nothing out there like this. There's nothing, literally nothing like this. And it's impatience on the students' part when they come here because they want it to be easy and they want it to be fast. And they don't like when I talk like this, but this is how you get that understanding. You have to know why you're looking at this. What's the benefit? How should I look at it? When should I expect it? Notice I'm teaching you time. I'm always talking about time. Notice I'm also talking about psychology and the right way of thinking about it. Every time I talk, I'm doing that. But you're looking for buzzwords and you're looking for how you think you should learn. And that's someone that's a self-taught mentality. And you can go out there and try to teach yourself trading, but you're going to come back to me because you didn't learn well. You won't be able to teach yourself. How are you going to teach somebody when you're ignorant? And if there's somebody you're trying to teach is yourself, you're literally saying that your ego is telling you that you know enough to know how you should be taught. Then don't watch me. Don't watch anybody. But no one's going to give you the skinny like this. They may give an opinion, but I'm telling you before the fact. And all you have to do is watch how I do it on Twitter, and I tell you exactly what's going to happen, and it does it. Now, I'm not promising you that I'm going to do it every time, every day. I don't do that. When I feel inspired to do it, then I'll